Hello and welcome in. Thank you for joining our presentation today on South Carolina taxes. This is put together by AGL Financial. We're located right here in the heart of Myrtle Beach. My name is Anthony DiNardo. I'm a registered investment advisor and fiduciary. I also prepare tax returns, which gives me a unique perspective on how retirement income decisions ultimately affect your taxes and overall lifetime income. Today's presentation is designed for new residents, prospective residents, and even locals who are trying to get a better idea of their tax situation. Without further ado, let's jump into our presentation. The presentation that we have for you today focuses on all of the different major tax types. That includes income, sales, property, vehicle, estate inheritance, and even capital gains tax at the state level. And while South Carolina is the focus of this presentation, wherever possible, we're going to drill down to the local Horry County level to give you the best possible idea of your overall projected tax burden. To be able to project a tax burden, you have to take some liberties into establishing a baseline. For our baseline, we looked at the average Horry County citizen, which is in about the 75th percentile of net worth in the United States. And while we are going to look at all 50 states here, the primary focus is going to be South Carolina versus the northeastern states, as that's where we see most of our folks incoming from.
Now, as you can see on screen, we have a state-based ranking on the implied tax outflow per year, comprised of those different tax categories that we spoke of on the previous slide. And again, this is based on the 75th percentile US citizen net worth. And on average, on any of the states you could go to, you would expect to pay $16,300 in tax outflow per year. South Carolina is better than that by about $1,200 to $1,300 per year. Now, to better understand this chart, you need to understand how the rankings work. And I think a good way to identify that is on the income tax side. You'll see a bunch of ones there, and the lower the ranking, the better for this chart. So for all those states with the ones, you'll notice those are the states that do not charge any sort of income tax, which can be a good baseline for your understanding of the chart. Highlighted in blue are the different states that we're mainly going to focus our comparisons on. And this is because these are the states that we see the largest influx of citizens to Horry County from. Overall, South Carolina comes in 22nd overall, and that's really driven by the vehicle taxes in the state, which are high, as well as the sales taxes. And again, this is specific to Horry County, so we factored this in. So you'll see that sales taxes are near the bottom of the ranks as well. Now on this page, we have a more visually appealing chart than what we had seen on the previous slide. I like this one because it's a heat map, and rather than just specific ranks, it's going to give you a really good idea of where each of these states fall. And as you can see, the darker the red, the higher the tax outflow, the darker the green, the better the tax outflow. And with South Carolina, we're right there in the light green, so we are certainly one of the better states in terms of tax outflow. And in comparison to the Northeast, with the exception of New Hampshire, you'll see that the Southeast and South Carolina are going to be more beneficial from a tax outflow standpoint. So where does South Carolina truly shine in terms of taxes? Well, for inheritance and estate tax, your future heir does not have to worry about the state coming for additional taxes once that wealth is passed on. And while you are earning income, unlike Pennsylvania or Ohio, the income taxes are not taken at a local level here in South Carolina. Now, property taxes are where South Carolina truly shines. With an effective rate of 0.49%, we're one of the best states in the country. And on top of that, seniors that are 65 plus get homestead exemptions that can be up to $150,000, which significantly reduce how much you have to pay on your property. And then finally, we're Social Security tax exempt. And while that's normal in most states, some of the northeastern states that you could be coming from, like Connecticut, Rhode Island, Vermont, do tax those paychecks, and that could be a significant headwind for you. first tax category, the first tax category that we're going to be jumping into today is income taxes here in South Carolina. And we've actually had some major changes in 2026. First of which is the top income rate has been reduced from 6.4% to 5.21%, which is a huge win and puts South Carolina as one of the better income tax states. Now, with South Carolina income taxes, it's actually a progressive scale. So the first $30,000, you're only going to be taxed at 1.99%. And then anything after that will go now to that 5.21%. There's another benefit in the income taxes that have changed since 2026, and that's the retirement income deduction. It's $3,000 of non-taxable retirement income for ages 59.5 to 65, and then it actually is $15,000 of non-taxable income over 65. And this is any income, it does not just have to be retirement. The new bill has a function for the SC Board of Economic Advisors to meet each February to further reduce from 5.21% if economic growth continues to grow as it has over the last 10 to 15 years here in South Carolina. So we could even have lower income taxes in the future. Now on the flip side of this, the other change we have here is the SC income adjustment deduction. And this actually replaces your standard federal deductions. And that's typically, right now, it's $32.2 thousand for married couples and $16.1 thousand for single. Now, this deduction actually lowers it slightly. It's $15K and $30K. So a little bit of a loss in terms of the overall deduction there. And this deduction's also phased out if you make over $95,000 or $190,000 as married filing jointly. And then the other downside of this is that while in previous tax years it would pick up after those itemized deductions were taken into account, this time it's going to pick up before then. So any of those deductions you may have been getting on your federal income now won't be used on your South Carolina one. All things considered though, these changes are a win for South Carolina because we have that major decrease in the income tax. Let's move over to our first tax category, which is income taxes in South Carolina. We've actually had some key changes here since March 2026. The first of which is the top income tax rate has been reduced from 6.4% down to 5.21%, which is a major win. Now, when you do have income taxes in South Carolina, you go on a progressive scale. So for those first $30,000 that you've made, you're only going to pay 1.99% of income tax on that. It's from $30,000 up, where now instead of you paying 6.4%, you're down to 5.21%. The next area I wanted to cover here is the retirement income deduction. Now, it's $3,000 off of your tax bill if you're from age 59.5 to 65. And that number actually jumps once you do hit 65. It'll go to $15,000, and that can be on any income. It doesn't just have to be on retirement funds that you're taking out of. Now, we also, with the new bill, have a function from the South Carolina Board of Economic Advisors where they have a plan. All right, let's jump into our first tax type, which is income taxes. Now, we've actually had some major changes since March 2026 on this topic. The first of which is the highest tax rate has been reduced from 6.4% to 5.21%, which puts it in one of the better states for income taxes across the US. Now, South Carolina is on a progressive scale. So from that $0 to $30,000 made, you're actually only going to pay 1.99%. And then once you've made over 30,000, that's when it'll jump to that 5.21%. Another cool thing about the bill and the changes they've made is that the South Carolina Board of Economic Advisors agreed to meet each February going forward to further reduce that 5.21% income rate, assuming that we are still having growth like we have had in the past 10 to 15 years. So that potentially could even be more savings and less tax burden in the future years here in South Carolina. Now, the downside of these changes is we did have some differences in our South Carolina income adjustment deduction. Now, this deduction actually replaces your federal income deduction, and typically that's at about $32,000 right now and $16,000 for married filing jointly and single respectively. In South Carolina, it's slightly lower at $30,000 and $15,000. So we already have a little bit that's taken off the top there. But on top of that, you also lose this deduction once you make over $95,000 or $190,000 married filing jointly. And then the last note that I have on this change that is more of a negative effect is that it does not consider the itemized federal deductions like it used to. And while most people don't have itemized deductions, if you do, you're not going to get that additional lower tax starting point that you had gotten in previous years. Let's move over to our first major tax category, which is going to be income taxes. And with this one, we actually had some major changes in March of 2026. The first of which is that the highest tax rate has been reduced from 6.4% down to 5.21%. And in South Carolina, we actually have a progressive tax system. So from $0 to $30,000, you're only going to pay 1.99% of income tax. Once you exceed that $30,000 threshold, anything earned over that is now going to be taxed at 5.21%. And with this system, it puts it as one of the most favorable income tax states out there. Now, another cool change that we had from this March 2026 bill is that the South Carolina Board of Economic Advisors agreed to meet every single February to track the economic progress within the state. If we continue to trend as we have and grow, they're actually going to look to further reduce down that 5.21%. So that could even be less of a tax burden here in future years. Now on the flip side, we have now a new SC income adjustment deduction. And I'd say that's more of a negative than what we had in the previous system. Because first of all, it replaces your federal deduction, which right now is $32.2 thousand for married couples and 16.6 or 16.1 rather for single individuals. In South Carolina, it's now $30,000 and $15,000, and that is a couple thousand reduction of what you would be seeing. Additionally, with this system, is that deduction's phased out once you make over $95,000 or $190,000 as a married filing jointly. So that can be an excessive burden if you do cross that threshold. Finally, the difference from this year going forward is that the federal deduction for itemized taxes is now not considered. Before, South Carolina taxes would start after those itemized deductions had already been removed from your federal taxes. Now, they're starting at an earlier point on your tax return, and those deductions will not be taken into account. Overall, this is a net positive, even though we have had a little bit of the tax differences on the return side of things for South Carolina. Most people don't have itemized deductions, and this is going to be less of an overall tax burden. All right, let's get into our first major tax category, and that's income taxes. And with income taxes in South Carolina, we've actually had some major changes in 2026. The first of which is that top bracket that used to be 6.4% is now down to 5.21%. And in South Carolina, we actually have a progressive system. So your first earnings up to $30,000 are going to be taxed at 1.99%. Anything after that $30,000 that you've earned is then going to be taxed at that new 5.21%, which is a major win and puts South Carolina in one of the better states for income taxes. Now, another change that we had here is the retirement income deduction. For any retiree or any person that's taking from retirement income from 59.5 to 65, you get a $3,000 reduction. From 65 up now, it's actually a $15,000 reduction of potential tax burden on your overall gross income. So major win. And from the 65 plus group, it doesn't even have to just be retirement accounts. It can be any sort of income you have in, but if you're over 65, you have a $15,000 reduction on that gross income starting point. Now, another cool part about this bill is the South Carolina Board of Economic Advisors. Let's move over to income taxes. Let's move over to our first category, which is income taxes here in South Carolina. We've actually had some major changes in 2026 to how income is taxed. The first of which is the top tax rate of 6.4% has now been reduced to 5.21%. And in South Carolina, we actually have a progressive system. So for the first $30,000 that you earn in a year, you're actually only taxed at 1.99%. From 30,000 up, it's now at that 5.21% rather than that 6.4, which is a major win and puts South Carolina among some of the best income tax states out there. Another cool feature that we had from this change is the retirement income deduction. If you're 59.5 to 65, you get a $3,000 deduction on what your gross income would have started with. And then if you're 65 and older, it's actually $15,000 off of that gross income, which is a really great place to start. And what's great about it is it's not just retirement income, it's any sort of income that you're bringing in over that age of 65. And then the final really positive change we had here was the South Carolina Board of Economic Advisors agreed to meet each February to review the progress of the state. And if we continue to grow, they're actually planning to further reduce that income tax burden. So we'll be at a point where it could be under 5% if things continue to trend the way they are in South Carolina. On the flip side of this bill, we did have some more tax negative features come into play. Overall, this is a net positive, but we do have to explain the things that did not go as positive for us with this change. The first of which is we have replaced the federal deduction system that South Carolina has always started with our own South Carolina deduction. And with federal taxes, it's about 16.1 thousand of a deduction, or 32.2 if you're filing jointly. South Carolina now, it's slightly reduced, where it's at 15,000 for single filers and 30,000 for married filing jointly. Another change that came into place is that there's now a phase out on that as well. If you earn over 90,000 as a single filer or 190,000 married filing jointly, you're actually going to be totally phased out of that 30K or 15K deduction. And then the final piece is where we start the tax returns. In previous years, South Carolina would pick up the return after any itemized deductions were reduced from your federal tax return. Now with this change, we're starting at an earlier point with the gross income, and so those federal itemized deductions will not be counted and will not be able to lower your gross income as they previously were. That being said, most folks do not itemize their deduction, so it's unlikely that it'll affect you, but I did want to mention this as part of all these changes that happen. Let's move over to our next tax category, which is going to be property taxes and is the bread and butter of our taxes and ease of tax burden here in South Carolina. Now you can see in the chart, and as we mentioned before, the effective tax rate is 0.49%, and it really stands out across all of the US, but in comparison to our Northeast states. South Carolina actually ranks in the top 5 of tax burden for property taxes. Another cool feature of the property taxes that we have here in South Carolina is the homestead exemption for seniors that are 65 and older. They get to take $50,000 off of their top line homestead value. So instead of being taxed at whatever that value is, they get that $50K reduction and they're only taxed at that 0.49% effective rate. And another cool thing that's going on right now is the SC Bill 768. Earlier this year, the Senate passed this bill and it's sitting with the House as I currently make this video. But what it will do is it'll increase that homestead exemption for seniors to $75,000 if you've lived in South Carolina for 5 years. It'll go up to $150,000 if you've lived here for the past 10 years. So depending on where the SC House sits on this could be a major win for South Carolina citizens. And then within Horry County, we actually have a rule of a 4 and 6%. And the difference there is if you're a resident and this is your main home, you're going to pay a 4% rate locally with Horry County. If it's your second home or it's used as a rental property, that rate actually jumps up to 6%. Now, how do you qualify? We'll look at the next slide a bit more to make sure that you're set up to only paying that 4% rate if possible. Now, to be able to drop from that 6% secondary home property tax rate down to 4%, you must establish legal domicile here in South Carolina. And the first step for doing that is to be physically present here more than half of a year. So essentially 183 days plus that you're physically present in South Carolina. To do that more in an electronic standpoint, you're going to want to move a lot of the vehicle information that you have, like registration and license, and even your bank account address down to South Carolina, because that's generally where auditors of your outgoing states are going to be looking first. You can actually also do a formal declaration to let those states know that you have moved out of there and that you're in South Carolina, and again, to make sure that you're getting that correct domicile rate. Now, New York and PA are two of the more bigger proponents of this, but they actually do these audits. And if they find out that you've changed your domicile, but you haven't met these requirements, there's consequences in terms of back pay, overdue taxes, interest, and things that they will still charge you if you haven't met these requirements. So it's really important that you do a formal declaration and you move over all of your information. Now, to get down to that 4% property tax rate, you actually have to establish legal domicile here in South Carolina. And to do that, you have to physically be present in South Carolina for 183 of the last 365 days, or essentially more than half the time of the previous year. Additionally, you're going to want to show that electronically as well. And you can do that by updating your vehicle registration, getting a new driver's license in South Carolina, as well as updating your banks to show that you're currently present in South Carolina and that's your mail should go to. Additionally, you could be exempted from that rate if you rent out your property here in South Carolina for more than 72 days. So be very careful with that if you're around that figure of days rented, especially if you're trying to get that property tax reduction. Now, in northern states, especially New York and PA as we see the most prevalent, is they have a team of auditors that will look at their outgoing residents to make sure that they've met these requirements. If you fail to meet those requirements, the auditing team will come out and they could potentially charge you back taxes, interest, even penalties for not having the right domicile set up. So that's why it's really important that you make a formal declaration when you officially move down here, so you're letting the northern states know and you're getting that better 4% rate with South Carolina. Let's move over to South Carolina capital gains tax. While most folks are familiar with the federal tax rates for capital gains, which is 15% for long-term assets and 20% for short-term, they don't totally understand how each state taxes those. And South Carolina is actually one of the more favorable tax states in the US for capital gains. And a big reason for that is that they have a long-term capital gain reduction of 44% for any of those sales, which effectively moves its effective rate down to 2.92% for South Carolina. Most of the northeastern states are going to be at that ordinary rate for their state taxes, and I list some of those on this slide here so you have a quick comparison. But what you'll see is South Carolina does stand out compared to most of those northeastern peers. Additionally, I did want to mention the net investment tax income, because if you are around the $250,000 range for modified adjusted gross income, you could get hit with a 3.8% net investment income for any long-term capital gains in general. So if you are near that threshold, you want to be very careful about when is the right time to sell those assets so that you're not hit with another 3.8% fee from the federal government. The last point I want to make here is harvesting those capital gains near retirement. With the setup we have in South Carolina and that 44% reduction, you want to make sure that you're selling at the right times, depending on where your income lies for those years, especially when you're nearing or just retiring. It could be critical to how you spread out your retirement wealth in managing that tax burden throughout your retiree years. Now let's move over to sales tax in South Carolina. And while the 6% state rate is closer to middle of the pack, when you factor in our local taxes, especially here in Horry County in the city of Myrtle Beach, you can get up to 8 to 9%, which is in the 80th percentile of sales tax across the United States. Now, on things like unprepped groceries and pharmaceutical items, we do not tax those here, and across most of the country, you don't get taxed on those either. We also have a 1% deduction if you are over 85 and are able to show proof of ID to your cashier. So if you have that and haven't been using it, take your 1%. I did want to compare on the bar chart you'll see here on the screen of the highest tax counties across some of the major Northeast states we're comparing here. And you can see Horry County is around the range of these states, but this is still some of the higher taxed areas across the continental US. Let's now move over to inheritance and estate tax in South Carolina. Now, the beautiful thing about this is there is no estate and inheritance tax here. South Carolina won't touch any of that money from your heirs, regardless of how much wealth you build up. And that differs from the Northeast states. While there are a few that are going to tax regardless of the nest egg you build up, a lot of them are only going to tax when you've exceeded a certain threshold that's going to be passed along to your heirs. And you can see that play out here on the slide, which each of the states that I've named there. I do want to note, though, that if you have recently moved from the Northeast, it's important that you meet with a financial planner and a lawyer to go through the POA, the will, your estate plans, because this could have some significant administration friction down the line if these were created up north without factoring in South Carolina laws. So if you do have questions or want to know more about that, please reach out to a local planner or a lawyer, and we can certainly help with that. All right, let's talk through vehicle tax burden. Now, if you're coming from New Hampshire or Delaware, you have not had to pay taxes on this purchase of your vehicle, nor on the yearly upkeep on property tax of that vehicle. Unfortunately, here in South Carolina, we have taxes on both those items. And that's the main reason we rank 46th out of 50th in terms of tax burden across the US. Now, as you can see on the bar chart on screen here, sales tax is not the primary driver of that. At 5%, we compare more favorably to the Northeast states that we're looking at on this page. It's really the property tax that becomes the main burden here, and that's because it's a yearly rate that's assessed on the value of your vehicle. It's at 2.45% of that vehicle for a South Carolina resident. There is some reprieve if you're local here in Horry County. With deductions that we have here, it reduces that 2.45% down to 1.33, which is much more favorable than the majority of South Carolina. Now, if you own a business or you're planning to start a business that will have a fleet of vehicles, it's important that you understand that the taxes are not the same. South Carolina taxes commercial vehicles around 75% higher on a yearly property tax basis than what you pay for your vehicle, which I think is really important for your business planning. In terms of bringing vehicles into the state, we actually have an infrastructure maintenance fee so that when you do register a vehicle, you'll pay $250 as a tax to bring that vehicle and to have it now domiciled in South Carolina. There is an area that South Carolina does want to give back, and that's in the high mileage category. To define that is a bit tricky, so I'll do that with an example here. But essentially, if your vehicle is considered a high mileage vehicle, you can have a reduction of property taxes between 15 to 50%. Now, as the example I mentioned, if you have, let's say, a 2022 vehicle, and that vehicle is over 75,000 miles, it's going to be considered high mileage. And the amount of deduction you'll get is based on the vehicle and how many miles over that 75,000 you get. Now, you kind of have to work around that baseline of 2022 and 75,000 miles to understand your own situation. And for every year you change, you have to change the mileage by 15,000. So for instance, if your vehicle's 2023, it is considered high mileage once it exceeds 60,000 miles, a 15K reduction from that 75,000. And then similarly, if we're looking at a 2024, it's 45,000 miles or more. And it's a very simple form that you can fill out, put in the high mileage, make sure you're taking all of the effective tax burden off that you can. I do want to mention the gas prices here as well, because that's obviously an attractive part of the state. In terms of taxes, we're on the better side of it for state and local, but gas taxes are not a huge burden unless you're in California or one of the really high states with that. Overall though, South Carolina in terms of gas prices in 2025 ranked 12th across the country. So while we do have the high vehicle taxes, we have the lower gas taxes that helps balance that out. When you move from one state to another, it is generally considered the most difficult tax year that you're going to face. And that's because as a part-year resident for each of these states, you have to allocate your income streams to both of these states, which is a very tedious process and also one that is highly error-prone. Even if you have a trusted tax advisor up north, they aren't going to fully understand the deductions and the different South Carolina nuances that you'll face from a tax perspective. Now, at AGL Financial, we help with this tax planning. We meet new residents here every year to make sure they're taking full advantage of the tax advantages here in South Carolina. We also offer Social Security optimization claiming strategies. If you're nearing retirement and deciding when the right time to choose Social Security is for you, come meet with us. We'll discuss your different options, the pros and cons to each year, so that you are getting the most out of Social Security as well. And then finally, we tie these two things together with an overall retirement plan. We look at where you're sitting today, what retirement looks like, and how much you can allocate to spending each year so that you're comfortable and confident in retirement. If you'd like to meet with us, we have this QR code on the screen where you can scan right there and go and sign up for a meeting to meet with us directly. You can also head over to our website at aglfinancial.com and you can fill out a form to have a meeting there as well. We're online. You can give us a call. Our office is on Mr. Joe White Avenue as well. So if you have any questions and want to stop by, please come look us up. Thank you for joining the presentation today. We really appreciate your time. Have a good one.